Hello and welcome to another video where today I'll be taking you through a tax process for business mock exam. This walkthrough will be split into two parts. Part 1 will cover tasks 1 through to 4 and part 2 will cover tasks 5 through to 8. Just before we start, if you are looking for an additional mock exam to complete for this unit, or you want some extra support and would like to hop on one of my revision sessions, head over to my website willboardman.co.uk. Also, if you do find this walkthrough useful, be sure to give the video a thumbs up and subscribe to the channel for more mock walkthroughs and other accountancy related content. Right then, let's hop over to the exam and make a start. Right then, so for the tax process for business exam, you'll have 1 hour 30 minutes to complete 8 tasks and there are 80 marks on offer. Okay, let's get straight into it then with task number 1. So task number 1, this is about understanding and calculating UK tax law principles relating to VAT registration and deregistration, plus special schemes. So quite a lot in this first task that it can cover, so there will be a little bit of variation in terms of the questions that you will see. So this task contains part A through to D. Now it is worth noting you do get the reference material in the exam, which is just off screen at the minute because I've tried to cut down the recording so that it's as clear as possible, but it is just to the right where my mouse is now, and when you click on that it brings up the reference material. This will all be available in your actual exam, so just bear that in mind. You don't have to learn every single limit because you are given this reference material, so do familiarise yourself with what's in there before you sit your actual exam. Right then, so let's have a look at our first task. So a VAT registered trader sold an item to a VAT registered retailer for £1,500 plus VAT of £300. The retailer sold the item for £2,300 plus VAT of £460 to a non-VAT registered business. Part A then, for 3 marks, complete the following statements. So the first statement, the VAT registered trader who sold the item for £1,500 plus VAT will include VAT of, and we've got a drop down here, so we've got 5 different options, and we need to select the cost of charging this VAT to this particular trader. Now, when a business charges VAT on top of its product, so in this example it will be £1,500 plus VAT, assuming that's at 20%, that would be £300. Now the way that worked, I'm guessing most of you do know this at this stage, but they charge VAT on top of the item, which as I said in this case would be £300, and then the customer would pay the full £1,800. That £300 would then be paid across to HMRC. So they're just holding that £300 until it comes to their VAT return, and then they will pay it across to HMRC. So the cost to the business would be nothing. The next one, a VAT registered trader who purchased the item for £1,500 plus VAT and sold the item for £2,300 plus VAT will include VAT of, and again we've got 5 options. And again, it's asking what will the cost of VAT be to the business? Well, again, this would be 0. Now, the business has purchased this for £1,500 plus VAT, so that's your VAT of £300. However, just because they've paid that £300 VAT, they would be able to claim that back from HMRC. So the cost to the business, because they are VAT registered, would be nil. Because as I said, they can claim that £300 back from HMRC. Similarly, it says that they sold the item for £2,300 plus VAT. Now again, they would charge VAT on top of the item at, I assume, 20%. However, although that would then be paid by the customer, the business would receive £2,300 plus VAT, so the gross amount. However, that would then be paid across to HMRC when the business completed their VAT return. So the cost to the business would be 0. You'll see that at each point in the process, all they're doing is holding the VAT until it's either claimed back or paid to HMRC. Now that only applies to a VAT registered business. So let's have a look at this next line. The non-VAT registered business who purchased the item for £2,300 plus VAT will include VAT of, and we've got our drop down options, and we need to determine what will the cost of this VAT be to the business. Now, the difference is with this one, they are non-VAT registered. So this means that they cannot claim back the VAT on this purchase. And therefore, because they cannot claim it back, it would go as a cost within the business's accounts. So all we need to do is work out 20% of our £2,300 by multiplying it by 20%, which would come to 460. So as I said, because they cannot claim that back, it would go as a cost within their accounts. Okay, moving on to part B then. Identify which one of the following businesses may register voluntarily for VAT. All amounts are stated exclusive of VAT, and this is for 1 mark. So the key point within this question, well actually there are 2 key points. One is that it states which one of the following, so make sure that you're only selecting one in those circumstances. And the second is it states that it is voluntarily registering. So we aren't looking for a business here that has to register for VAT. We are looking for one that may voluntarily register. So let's look at our 3 options. So a business providing taxable services with an annual turnover of 105,000. Now we know that the VAT registration limit is now 90,000. So if the business had an annual turnover of 105,000, that would be over the 90,000 threshold, and therefore they would have to register for VAT. So it wouldn't be voluntary, it would be mandatory. So it wouldn't be the first option. The next one, a business making wholly zero rated supplies with an annual turnover of 78,000. Now, if this business is making zero rated supplies, they are classed as taxable supplies, whereas if it was exempt supplies, they are not. Now, they are under the VAT registration threshold, so they don't have to register. They could voluntarily register for VAT. So this will be your correct option. However, let's just check that bottom one and identify why that wouldn't be the correct answer. So a business making a mixture of standard and zero rated supplies. The annual turnover from the standard rated supplies is 65,000 and the zero rated supplies is 30,000. Now both of these are taxable supplies and therefore would count towards your VAT threshold. So in total, they are earning 95,000 in taxable supplies, and therefore they would have to register for VAT because they are over the VAT registration limit. Right then, moving down. So the following 3 businesses operate special VAT schemes. So we can see we've got A Limited, B Limited and C Limited. So A Limited have been operating the cash accounting scheme for several years. B Limited is a limited cost business and registered for VAT 3 months ago under the flat rate scheme. And C Limited has been operating the flat rate scheme for 3 years and is not a limited cost business. Okay, so part C, identify whether the following statements about the 3 businesses are true or false. So it's worth noting that within your reference material, you do get information on the special schemes, so do use that within your actual exam. Right then, let's have a look at each of these statements and determine whether they are true or false. So A Limited does not pay VAT to HMRC until money has been received from their customers. Now it states for A Limited that they are operating the cash accounting scheme and therefore they would not pay across VAT or claim back VAT until it was either paid by themselves or it had been received from customers. So in this statement, it says that they would not pay VAT until the money has been received. That would therefore be true. The next one, B Limited pays VAT on its gross turnover at a rate of 19%. So let's have a look at the statement for B Limited. So B Limited is a limited cost business and registered for VAT 3 months ago under the flat rate scheme. Now, a limited cost business is charged a flat rate of 16.5%. Now this statement says that they would pay 19%, and therefore that one would be false. Next one, C Limited has bought one item of equipment which includes £500 of VAT at the standard rate. C Limited can recover the input tax paid. Let's have a look then at the statement for C Limited. So C Limited has been operating the flat rate scheme for 3 years and is not a limited cost business. Now we know in most circumstances that a business cannot recover input tax if they're on the flat rate scheme. However, there is an exception when purchasing non-current assets. Now, a piece of equipment would be classed as a non-current asset. Now, the rules on this, you are allowed to claim the VAT back where the purchase is above £2,000 including VAT. And that just stops businesses basically putting small items through as non-current assets. So it has to be above £2,000 including VAT. In this statement, it doesn't actually say whether the asset was £2,000 or more including VAT. However, it does say that it includes VAT of £500. So what we need to do is we need to use that to calculate the gross amount, the total amount on the invoice. Now, we know that there are multiple ways to work from the VAT back to the gross amount on the invoice. However, the easiest one would just be simply to multiply it by 6. So for example, when we're trying to find the VAT on a gross amount, we divide it by 6. If we've got the VAT and we want to get back to the gross, we'd simply therefore multiply it by 6. So if we multiplied that £500 by 6, we get a gross amount on this invoice of £3,000. So in that case, it is over the £2,000 limit, including VAT, and therefore they would be able to claim the VAT back on this invoice. Now, the last statement, both B Limited and C Limited are currently entitled to the 1% flat rate discount. Now, you get a 1% discount for the flat rate scheme in your first year of registration. Now, B Limited registered for this scheme 3 months ago, so they would be entitled to the 1% flat rate discount. However, it states for C Limited that they registered 3 years ago, so they would not be entitled to the 1% discount. So that statement would be false. Scrolling down then. So Daisy Properties Trading has been operating the annual accounting scheme for several years. Taxable turnover for the next financial year ending the 31st of March 2025 is shown in the following table. And we see that we've got a table here which shows taxable turnover for each month and a running balance to the cumulative taxable turnover in this far right column. So let's have a look what we need to do. Part D, identify the date that Daisy Properties Trading must withdraw from the annual accounting scheme. So a business has to withdraw from the scheme if their turnover goes over, their taxable turnover, I should say, over 1.6 million. Now looking at this, they would have therefore gone over at some point in December 2024, because by the end of December 2024, the cumulative taxable turnover was 1.7 million. So over the 1.6 million to come out of the scheme. Now, the rules on this from HMRC, the business has to leave the scheme at the end of the tax year that they go over that 1.6 million. So if they went over in December, as it looks like they do on here, they wouldn't have to come out at the end of December. They would have to leave the scheme at the end of that business's financial year. Now, it states here that the end of the financial year for this business is the 31st of March 2025. So they therefore have to leave the scheme on the 31st of March 2025. So scrolling down, it would be 31st of March 2025. Okay, so that covers task 1. Hopefully nothing too scary there. Let's get into task 2. So task 2 is worth 8 marks, and this task is about calculating and accounting for VAT. This task contains parts A through to B. Tas Trading is VAT registered and sells a mixture of standard rated, reduced rated and zero rated supplies. Part A, complete the table to show the VAT and net amounts for the following supplies. Round down your answers to the nearest penny. Okay, so this one's for 4 marks, so it would be 1 mark for each box. So it's given us the gross amount for both the standard rate and reduced rate supply. Now there are multiple ways that we can calculate the VAT and net. I spoke about one just briefly in task 1, where we could, for a standard rate of supply, take our gross amount and divide it by 6. However, you can't do that on the reduced rated supplies, which we know is charged at 5%. So for the standard rate of supply, to work back to the net figure, because the standard rate is charged at 20%, the gross is effectively equivalent to 120%. So the way that I would get back to the net, which is effectively 100%, is to take our gross of £420, divide it by 120 to get 1%, and multiply it by 100. And that will give you a net amount of £350. So let's enter that in. Now, if you've got your own way of doing this, you are more than welcome to keep using it. I'm showing you one method here. Like I said, there are other methods. Just use whatever works for you in these particular questions. So then to calculate the VAT, as I said before, we can either divide this by 6, we could divide it by 120 and then multiply it by 20, or we can just do the difference between the gross and the net amounts now that I've worked out the net. So that would leave you with VAT of £70. Now for the reduced rated supply, we're going to use the same mathematical technique. So it's the same method. So instead of being at 20%, this time it's at 5%. So therefore your gross would represent 105%. So to get your net, what I would do is take your gross of 420, divide it by 105 to get 1%, and multiply it by 100. And that gives you a net amount of £400. And then again, to get the VAT, we can just do the difference between the two, which is 20. Alternatively, you could have done 420 divided by 105 to get 1% and then multiplied by 5 to get your VAT amount. However, it is just easier to do the difference between the net and gross once you've worked out the net, of course. Okay, let's move down. So Tas Trading offers a customer a prompt payment discount if payment is received within 7 days. The customer is not VAT registered. Part 2 of this question then, identify the effect on VAT of the customer taking advantage of the prompt payment discount. So this is from Tas Trading's perspective here. So they have made a sale to this customer and they've charged VAT on this product or service. They've also offered a prompt payment discount. Now, if that customer takes the prompt payment discount, it will reduce the gross amount on that invoice. And by reducing the gross amount, it will also reduce the VAT and the net amount. As I said, because it will lower the total amount to be paid. So therefore, it will decrease the VAT. Moving down, Tas Trading made the following sale on the 23rd of May. Standard rated goods for £120 plus VAT of £24 and zero rated goods for £96. The customer has requested an invoice from Tas Trading. Tas Trading issues a simplified invoice to the customer. Part B, identify which 2 of the following amounts must appear on the simplified invoice issued to the customer for 2 marks. So obviously 1 mark for each correct answer. So we've got 4 options here. Now on a simplified invoice, there are a few different items that we need to include. Now this information is included within the reference material. However, I have been teaching this for a very long time now, so it is pretty ingrained in my head. So for a simplified invoice, all we need to do is we need to include the VAT rates, and we also need to include the total or gross, whichever way you want to look at it, amount for each different rate of supply. So in here we have a standard rate of supply and we have a zero rated supply. On a simplified invoice, we still need to split those out and show a separate line for each. And we need to include those at the gross, or as I say, total value. So it would be 120 plus VAT of 24, so 144, which we can see is the bottom option, and the 96, which, as it's zero rated, would just be simply 96. Okay, moving down to part 2 then. Identify when TAS Trading must issue an invoice to the customer. So this is the same rule for simplified or not simplified. So this is the same rules for a simplified invoice or just a standard invoice. And the rules are set by HMRC that an invoice must be issued within 30 days. Okay, excellent. So that covers task 2. Again, hopefully relatively pain-free there. Let's move on to task 3. So task 3 is worth 12 marks, and this task is about recovering input tax. This task contains parts A through to D. Part A then, complete the following statements for 2 marks. Residual input tax is input tax incurred on purchases and expenses relating to, and we've got a few options. So we've got both taxable and exempt supplies only, and taxable supplies only. Now, residual input tax refers to input tax that relates to both taxable and exempt supplies, specifically those that are not directly attributable to either. So if, for example, the input tax related to entirely taxable supplies, then it could all be claimed back. If, however, it was related only to exempt supplies, then we couldn't claim it back. However, residual input tax is where it relates to both. So an example could be for, such as rent for a room where you produce both taxable and exempt supplies. So in a sense, it does relate to both. The next bit, if a partially exempt VAT registered business exceeds the de minimis limit, the business can recover a restricted amount of input tax, all input tax or no input tax. So if you are partially exempt and you are under the de minimis limit, what they allow you to do is just recover all input tax. Because what they're saying is if it's below that limit, it is not material. However, if you go over the de minimis limit, then it is restricted. So it would be a restricted amount of input tax. And the way they would calculate that is if you got input tax relating to both taxable and exempt supplies, you would proportion it. So you would look at the amount of exempt supplies, you would look at the amount of standard rated supplies, you would then apportion that input tax dependent on that percentage. So for example, if you made 80% of standard rated supplies and only 20% exempt, you could claim 80% of your input tax back on that particular expenditure. There obviously is a little bit more to it than that, that is the sort of general idea behind it. Okay, let's move down then to part B. So High Life Trading is a VAT registered business and has incurred the following expenditure, including VAT at standard rate. Part B, identify whether High Life Trading can recover the input tax or the input tax is blocked for each expenditure incurred. 4 marks, 1 mark for each. So the first expenditure we have on the list then, hospitality provided to an overseas customer from Italy. And we need to determine, can we recover the input tax or is the input tax blocked? Now, HMRC do allow us to have any hospitality or entertainment if it is an overseas customer. So they would be able to recover input tax. The next one, a lunch provided to a former employee. Now, the key bit here is that it states a former employee. Now, if it was a current employee, they would be allowed to recover input tax, but a former employee, they would not. So that would be blocked. The next one, an evening meal provided to, an employee. There you go. Okay, so we literally just spoke about this. So if it's an employee, then they are allowed to recover the input tax. Obviously, if it's still related to work. If it's just a casual thing, in no way related to work, then it's not even business expenditure in the first place. However, if it is work related and it is for an employee, then they could recover the input tax. And then the last one, attending a sporting event with a client from the UK. As I said when I was talking about the first one, if it's an overseas customer, then you are allowed to recover the input tax. However, if they are from the UK, it is blocked. Right then, moving down. The accountant of High Life Trading has carried out a review of aged receivables at the end of the financial year to the 31st of March 2025 and identified some bad debts. High Life Trading does not operate any special VAT schemes. All suppliers are standard rated and payment terms are 2 months after the invoice date. So Part C, for each bad debt, identify whether they are eligible for bad debt relief or not eligible for bad debt relief. And Part 2 states calculate the amount of bad debt relief available, round down your figures to the nearest penny. If your answer is 0, then enter 0. Okay, so there are 2 rules that you need to hit for HMRC to allow you to claim back bad debt. And they are that A, the debt is written off in a business's accounts, and B, that the debt is 6 months overdue. So not 6 months from the invoice date, 6 months from when it was overdue. And that is absolutely key, especially in questions like this, where it states payment terms are 2 months after the invoice date, because that would extend the time before they can write the debt off. Okay, so let's have a look then. So the first one, customer A has total debts of £5,598, all of which are less than 6 months old. So it's not sounding so great. A bad debt provision has been made. This would definitely not be eligible for both reasons. The debts are less than 6 months old, and a provision for bad debt is not the same as writing the debt off. It's like a halfway point between the two. We're saying we don't think we will get it, but we've not absolutely said that we will not. So that would definitely not be eligible. So select not eligible, and the amount would therefore be 0. Let's have a look at the next one then. So customer B disputed an invoice for £498, including VAT, that was invoiced in June 2024. Now we are at the 31st of March 2025. So they are beyond the 6 months overdue. So that's the first tick. And then it states here the amount has been written off in the VAT account. So with the invoice being more than 6 months overdue, and it being written off in the accounts, they would be eligible. Now, in terms of the amount, it states that the invoice was for £498, including VAT, so we just need the VAT element of that. So I would just divide that 498 by 6 to get the VAT element, and therefore the amount of bad debt relief available would be £83. So moving now to the bottom one then. So High Life Trading received an invoice from a supplier totaling £1,200, including VAT, at the standard rate. The supplier offered High Life Trading a 3% prompt payment discount if payment was received within 7 days. High Life Trading took advantage of the prompt payment discount. Part D, calculate the amount that High Life Trading can recover as input tax, round down to the nearest penny. Okay, so they have an amount of £1,200, including VAT. This was a purchase. They have decided to take the 3% prompt payment discount. So we spoke about this briefly earlier, that 3% prompt payment discount would reduce the amount, well, any prompt payment discount would reduce the amount if taken on the invoice. So the way that we calculate this is relatively straightforward. All we do is take the gross amount of the invoice, so £1,200, and we calculate what 3% of that would be to get the prompt payment amount. So 3% of 1,200 is £36. We would then minus that off the total amount, so the 1,200, leaving us with a new gross or total invoice value of £1,164. And in this question, it wants to know what input tax would be on that invoice. So the new value, as I've said, is 1,164. So again, all we need to do to get the VAT amount included in that would be to divide it by 6. And that gives a new VAT amount of £194. So the amount that they would claim back as input tax would be £194. And it does say to the nearest penny, so it would be 0.00. Excellent, so that covers task 3. Let's now move on to task 4. So task 4 is worth 8 marks and is about preparing, calculating and adjusting information for VAT returns. Jazz is an accounting technician who works for a firm of accountants. Jazz is working on the VAT return for the Salt Design Company Limited for the quarter ended the 30th of September 2024. The company uses the cash accounting scheme. Jazz has entered a payment to a supplier totalling £529.20, including VAT, at a standard rate, as indicated on the invoice. The accounting software has calculated the VAT as £88.20. Whereas the supporting invoice shows VAT as £25.20. Part A then, identify the reason for the difference by completing the following statements for 2 marks. So we need to determine if the invoice is either correct or incorrect. Now it states here that the invoice indicated that the VAT should have been at standard rate. So therefore the VAT should have been included as 20%. Now, all we need to do is calculate, therefore, what would have been the VAT amount included within this £529.20. So this is a payment of £529.20, so we know it's the gross or total amount. So we hopefully know this by now. We've done it a fair few times already. If we divide that figure by 6, that will give us the VAT amount included within the 529.20. So if we do that now, that gives us a VAT amount of £88.20. So it should be on the invoice £88.20. However, it states that the invoice is only showing VAT as £25.20. Therefore, the invoice would be incorrect. The next part then says it has included the VAT at the, and we've got reduced rate as an option, standard rate or 0 rate. Well, we know it's not standard rate because we've just calculated that as £88.20. We know it's not 0 rate because the VAT would be 0. Therefore, it must be the reduced rate, which would have been 5%. Now we can double check that as well by doing the total or gross amount on the invoice of £529.20 divided by 105, as I say, to get 1%, and then multiplied by 5 to get your 5%. And if we do that, it does come to £25.20. Okay, moving now to part 2. Identify one corrective action that Jazz should take for 1 mark. So they can either change the figure in the software to agree with the invoice. Definitely don't want to do that. We've already said that the invoice is incorrect, so that would be a strange thing to do. The second option, contact the Salt Design Company Limited to ask them to investigate with the supplier. That certainly sounds promising. So then the last option, use the figure in the software and take no further action. Well, again, we wouldn't want to do that because the VAT amount on the invoice is wrong. So if we had an inspection from HMRC, obviously they would question why is the VAT that much on the invoice. So the correct option would be to contact the Salt Design Company so that they can investigate it with the supplier. All right then, the next question. The Salt Design Company invoiced a customer for £1,500 plus VAT at a standard rate on the 1st of August 2024. The customer paid for half of the invoice on the 15th of September 2024 and the remainder was still outstanding on the 30th of September 2024. Part 3, calculate the amount of output tax relating to the above transaction that will be included in the VAT return for the Salt Design Company Limited for the quarter end of the 30th of September 2024. Enter your answer to the nearest whole pound. Right then, okay, so let's have a think about this. So if they were on the standard scheme, it would go off the invoice date, so they would just include the full VAT amount on this £1,500. Now, 20% of 1,500 would be £300. So if they were on the standard scheme, they would include the full VAT in their output tax of £300. However, further up, I think it said, it did indeed, the company uses the cash accounting scheme. Now that does change things because we know that under the cash accounting scheme, they will only pay or recover VAT on what has actually been paid or received. Now, if only half of the invoice has been received, that would be 750 plus VAT. So they would only include the VAT that had been received from the customer. So it would be VAT on half the invoice value. So all we need to do is calculate the VAT on 750, which would be half the invoice value. So that works out to be £150. So the amount of output tax to be included would be 150. Now then, moving now to the last question. So Jazz has noticed that the bank reconciliation for the Salt Design Company Limited was not completed for the previous quarter to the 30th of June 2024. He has identified 4 transactions that need to be posted in the accounting software. Part 4. Calculate the changes that need to be made to the figures for output tax and input tax for each transaction and round down your answers to the nearest penny. If there is no change, enter 0. Ensure you enter a figure into every box and do not leave any blank cells. So let's have a look at the first transaction then. So on the 4th of April 2024, payment to a supplier totaling £90.24. The supporting documentation shows VAT at standard rate. Well, if this is a payment to a supplier, we would be able to claim back the input tax related to this invoice. Well, if this is a payment to a supplier, we would be able to claim back the input tax related to this purchase. So all we would need to do, because we've been given the gross amount, I think we know this by now, £90.24 divided by 6, and that would give the business an input tax that they could reclaim of £15.04. Statement number 2 then. On the 10th of May 2024, the amount paid to HMRC for VAT for the quarter ended the 31st of March 2024. And that's for £3,868.71. Well, because it was a payment to HMRC, there is no VAT on that amount. That is the VAT. So that would be the amount that was owed from the previous quarter, which it actually tells us here, which is the 31st of March 2024. So that was the amount paid for what was owed from the previous quarter. So that would have no effect on either output tax or input tax. So that would therefore be 0. Now on here, I've just clocked as well that it does say do not leave any cells blank. So let's make sure that we don't leave any blanks. So that would be 0.00 on the first one. And then we need to enter 0.00 on both of these as well. Now the third one, on the 28th of May 2024, proceeds from the sale of a computer for £300. The Salt Design Company Limited had claimed input tax on the original purchase. Now, if they've claimed input tax on the original purchase and they've sold it, they would also need to include VAT on that item. So what we would do for this is, because the item is being sold for £300, that would be the gross amount, because it says proceeds, so that's what was actually received. So the VAT would be included within that £300. So all we would do, as we know, £300 divided by 6 to get the VAT included within that amount, which would be £50. So we'd enter in £50. And that would be paid across to HMRC. And we'll enter in our 0.00. As I said, it does say do not leave any blank cells. So the last one, on the 1st of June 2024, A direct debit for the payment of electricity for £262.50. The supporting documentation shows VAT at 5%. So this is at a reduced rate VAT, but the business could claim the VAT back on this service. So to calculate this, all we need to do is find the VAT at 5% included within the £262.50. So to calculate that, all we do, take our £262.50, divide it by 105 again to get 1%, and multiply that figure by 5, and that will give us a reduced rate input tax that we can claim back of £12.50. And remember, enter in 0 in our other box. Excellent, so that finishes off task 4. So that wraps up part 1 of this video. I hope you found it useful, and if you have, remember to hit that like button, and I will see you in part 2.